Hi, this is Sean League with League Estates, and today we're going to go over the rise in interest rates and the slowing of the market because of that. We're seeing the interest rates rise. The Fed's trying to fight this inflation, which keeps growing larger and larger because of energy prices and because of fiscal policies and printing money like there's no tomorrow. So, in order to fight that, they have raised the interest rates higher than they have since the 80s. And that is starting to really have an effect on the housing market. We're actually seeing a softening of the market. It looks like right now that demand is actually dropping, and that hasn't happened in quite a while. So we'll go through some charts here and see exactly what's going on. Take a look at the actual numbers and the real data, and then we'll discuss. Okay. Well, first of all, I'd like to thank Reports on Housing for providing these charts. But if we look at this first chart they have here, you can see on the left that interest rates have just skyrocketed. And like I said, that hasn't happened in 30, 40 years. And you can see on the lower left that the number of listings is rising rapidly, up to 16,000 houses in Southern California. So that's way up from January. That's not quite twice, but it's approaching that, and it'll probably hit that pretty quick. So I think if you follow that trend, then I would say this is going to switch to a middle market or maybe even a slight buyer's market by the end of the year, if this trend continues and they keep continuing to increase interest rates. Okay, now here you can see the interest rates of mortgages, and they're already up at above almost 5.5 now. And they're continuing to rise. So we're seeing some loan lenders giving out 6+ mortgages now. And I think that's just going to continue to rise. And I would say that based on all the data, that this will rise through till the end of the year. The Fed is going to keep raising interest to try and slow down the inflation numbers. All right, on the next slide here, we can see that the purchase applications, which are applications to buy a house through a mortgage, they're down 17% year over year. So the same time last year, they're down 17%, and they're down. That's the lowest since 2018. And 2018 was the last time we had a major interest rate spike, not as large as we have now. All right, so here we can see there's been a 13% increase of listings on the market. Of inventory that's available just in the last 2 weeks. You can see the orange line there actually rising over a previous year inventory, which hasn't happened in 3 or 4 years, since 2019. So that's just showing you that the market is changing, that this crazy demand that we've had since January is finally waning. But I think it's not going to just end here, especially if they keep continuing to raise interest rates, spike pretty heavily. So I think there's going to be a lot of inventory on the market shortly. So this points to us being at the top of the market right now. If you're thinking about selling, I would sell right now. As interest rates go up, the demand is going to keep dropping, which is going to push the market towards a buyer's market. And we may end up being in a buyer's market by the end of the year, which would create a lot less demand, and you'll have to take discounts on your asking price instead of what it is right now, where people are bidding against each other to raise the prices above what's asking. Yeah, and you can see on this chart, this is just continuing that trend, what we're expecting, through the end of the year. So by the end of the year, we're looking at 35,000 listings compared to about 16,000, 17,000 right now. It was only 12 back in January, and that's all of Southern California. So I remember back in January, there's less than 80 houses in all of Irvine. But right now, we're at 211 homes. So that's a huge increase for such a short period of time. And just walking the neighborhoods, talking to people, seeing what people are doing, I'm seeing a lot of houses being prepped for the market. They're tearing out carpets, redoing the fronts of their houses. I'm seeing a lot of that kind of activity and coming soon signs. So I think there's going to be a lot more houses on the market really shortly. I'd say in the next 2 or 3 weeks. And we're also seeing listings having less offers. So where we'd have 10 offers or 5 cash offers for a house in the first 2 or 3 days, now we're seeing 1 or 2. The buyers are still there. There's just not as many buyers anymore. All right, on this slide we can actually see that demand and how it's dropping. It's arcing over like that. So it looks like we were at the local minimum just a couple weeks ago, and so that was our maximum demand. So that demand should keep dropping, especially as interest rates continue to rise. So you can see here that was the peak back in mid-March, and now it's begun the slow decline. So what we're going to see in the short term is it's still going to be a seller's market. You just won't have prices going $400,000 over asking as often anymore. So I think the prices that people ask will be more in line with what they actually sell for. And then by the end of the year, there may be discounts from what people are asking. So since COVID hit, there's been this pent-up demand of people wanting to move. We have a lot of customers that want to sell their house and move, but they have nowhere to go. There was just no inventory for them to buy. Everything was multiple bidders, 5, 10 bidders. And many people had to, sell their house in order to buy a house. And that was just impossible in this market, or nearly impossible. It was really, really difficult. So I think as this inventory rises, that there's more inventory in the market, I think you're going to start to see more people actually put their house on the market to sell. So they can move to that larger house or that smaller house because there's something they can actually buy. So this may actually release a flood of the demand that's been there to sell. This may actually release that. And if that happens, then we're going to see it, flip towards a buyer's market much faster. So we'll have to watch and see. It's going to be an interesting year.
Thank you for watching. If you have any questions, you can call us or call Joan at 949-298-0727. That's right.
Thank you for watching.